All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for July 6th, 2023. We'll start, as usual, with the hybrid swing portfolio on 30-minute charts, beginning with Alcoa. So this blue box is a 5-day look back. The light blue box is a 10-day look back. These red boxes are standard risks. The yellow box is today's price action from high to low. And then the red is sells and green is buys. And a closed white box is, one trade. So that's a scratch. This one was a fractional gain. This one was a gain. That was a short, and so forth. Okay. So we had two trades today in Alcoa. So after that nice little gain, we had the PSAR flip, held our nose and got short like we're supposed to, and then the bottom fell out of it today. It gapped down to here, which is already under a collapsing dragon. So I actually missed adding a second position there because by that time I had 2R in hand plus a collapsing dragon and the whole market melting up. But so we missed that one. It sold off all the way to here. Then the R10 reversed. The winter became spring. And we took the exit right here at when the edge of the dragon comes down and the excessive gains come back and meet the dragon. I'm thinking of just calling that the dragon exit. You met the dragon and you exited. It continued strong and turned into the spring, so I went ahead and used some markets money and bought the SSC at the PSAR flip. And we'll see how that goes. But that turned, that was about 4R on that one today. AI. So this one was very cool. We had the Kata 2 front run that closed well yesterday. Today it gapped down to here, so I exited because it was right at the PSAR anyway. And then that thing sold off like 9%. So when it's down here at the low of the day, it's at minus 9% compared to yesterday's close. Well, that'll get your attention. That's finding the mover. And so after cashing that nice one, I missed the short, but I did get a 1, 2, 3 entry with a standard risk, and that thing did nothing but just take right off. Now, when it rolled over, and then it hit the upper skin of the dragon, there's that dragon exit, and so this thing gained that much on this much risk, which is that's about a 2R win. So happy as a clam on that one. That one's still in play. Caterpillar, great American company. We had the opportunity to short it yesterday. I just don't like shorting them overnight. It gapped down to here. That's a clear collapsing dragon. So got short here. Standard risk box. It sold off as far as it was going to sell. That was to a new 5-day low. But it's also holding support here. And then it just made an orderly move back to the edge of the dragon. So dragon exit. About +1. Nothing to sneeze at. Cliff, this was a trade of the day for sure. So we'd had one position short yesterday, and we exited. And then it gapped down here. There's your collapsing dragon. So short with standard risk. It sold off hard on a single position. When the R10 reversed and came back to exit at the dragon, that would be a dragon exit. 1, 2, 3. So +3 on Cliff, no overnight risk. I thought hard about this one, but I'm taking that position in Alcoa and in U.S. Steel, and I didn't feel like I needed more exposure to the metals on that overnight play. So no trade on that one. CVS, I just took the COTA 2 at the PSAR flip intraday, just like I'm supposed to. The least surprising move would be back to here, which is where it went from here. So this could get to, 70.30, which would give us about a 3R win. So we'll look for that one tomorrow. Dish Network. This was the collapsing dragon short on the gap down. It sold off. It ran all the way down to here and then started rocketing back up. And that's what a bottoming tail looks like. And because it had moved a full risk box off that low, I took it and captured about 3R. I thought about the 1, 2, 3 entry here. And then when it made the SSC, I had to take it here. I don't regret that decision. And this one closed at about +1 right here. So that one was instructive. Devon Energy. Beautiful gift trade again today. Here's your weakness. Gap down here. Sold off a risk box. Short. Dragon exit. 1, 2, +2. That's almost becoming the standard normal trade. No trade in electronic arts. Emerging markets. This was one, I mentioned my regret over the last couple of days of missing this one. So this one had a double collapse. It gapped all the way down to here and started selling off. So got short. And then most of the run was over. So when it made an orderly exit, we captured +1 and no overnight risk. No trade in Ethereum. This long position that we started in Mexico on the basis of stable, it gapped down to here, so we lost 1, 2, 3. This is a -3. And then the revenge trade kicks in, stop and reverse. And then this one gave us another dragon exit right here. So that is 1, 2, 3, 4, 5. So +5 on that one for a net of +2. So that one was a roller coaster ride, which is why I like Mexico. It gives you that good volatility. Gap down, a gap and drop in Brazil. And that's like a collapsing dragon here for sure. Collapsing dragon against this and almost a double collapsing dragon there. And standard risk and +2 on a dragon exit. Yeah, I like the name dragon exit. We're going to do that. So you will recall from yesterday, I hated this short, getting short Intel and tech in a bull market. But that's what the pattern called for. So I held my nose and got short. And it closed well the rest of the day. That was nice. And it gapped down to here and started dropping some more. So put a second position on. And you guessed it, dragon exit. And this is about 1, 2, 3, 4, 5, about 6R. And no further overnight risk. That is going to set up, and I thought hard about this as an SSC. But tomorrow's another day. IP initiated a SSC. IYR initiated a 1, 2, 3 after we took this loss. So we were caught a 2 to here and felt good, and then it collapsed against us. And here's where that tight risk box hurt us. So that was almost -4. And then it kept falling further and then gave me a 1, 2, 3 entry and allowed us to get 3 of that back. So net -1. KRE took the half an hour intraday gift, still holding the Mattel swing from my brother's alert from yesterday. I kind of like that. It didn't melt down like everything else. McDonald's, we took a 1 hour loss. I missed the 1, 2, 3 reversal on this one, but that wasn't too painful. This one was nice in Merck. Yesterday's little consolidation zone broke. Collapsing dragon on the gap, standard risk, and this thing is now holding 3R, and it closed at the low of the day, and it's below the previous support level. So this one, I think, with a raging winter below the Red River, that one could be massive selling in the morning. So that would be good for us. Microsoft initiated a COTA 2. Marijuana took the yesterday's short, and it followed through today and then just took a normal dragon exit for +2. NVIDIA, I missed the collapsing dragon, missed the SSC. That had a nice recovery move today after the initial pain, so I think that has some legs tomorrow. Clean Energy just completely missed that move. Just bad form. Rivian, on the other hand, our little gap and go, which was a continuation of these two double digits, and we talked yesterday at length about the power of the tight risk box. All it did today was micro gap down, recover, and on the emerging dragon, I just added a second position and we were already 3, 4, 5, 6R in hand, and then it closed very well for another 3R. So this one is +3, this one's +9, and we're just quietly holding 12R in Rivian. And more upside. It got through the key price level of 21, which you recall from yesterday was crucial. So that one has 30 in its sights. Treasuries took the intraday gift of 1 on the gap down and drop. Tesla, note the trade was to exit the SSC, this consolidation level at 280 could not support, and so this has now become resistance. And so on the gap down, as soon as it started failing, we exited, but we were able to capture about 4R on that multi-day entry from down here on the emerging dragon. And last but not least, U.S. Steel. Gap and drop, standard risk, 3R on a dragon exit. I like the way that briefs, the dragon exit. You were there when a new term of art was born. All right, so let's take a look at the sniper trade of the day. So here's our gap down. There was our close. Here's our gap down. Here's our peak of the OR3. There's the belly of the RL3. The next bar over, it continues to drop, so we're short. And then this is a standard risk in that symbol. Check or hold. To our battle drill, adding a second position. Twice. 3 times. Standard exit at the PSAR flip. And the first position returns 6. That's 1, 2, 3, 4, 5, 6. And some slippage. Second position earns 4, then 2, then 1. So that's plus 13. Notice the wild river. And when this is done, that's just about done. You know, Mr. Toad's Wild Ride. This was justified because of the collapsing dragon and plus having 12R in hand. PSAR flip to the short side. I want more of that. But it reverses against me quickly. It feels like a fake 1 go 2. So this is a case here, and we talked about this during the Q&A for the foundations guys at length. Why this is a nice position to be in, right? So this is supposed to fail right away. It doesn't, and then hits the PSAR flip. So we end up taking a fractional loss on that one. That's what we lost. Now, this yellow box is the standard risk. Standard risk. That's also known as the execution risk. Because if price breaks through here, this is where I'm actually setting my execution risk. I'm sorry. The standard risk is this yellow box. That's what the president meant to say. But here's the thing. And we talked about this extensively in the Foundations course Q&A. A violation of this red line is all I need to know that the upside move isn't working. Any price below that red line tells me I need to be short. So even though my standard risk is here, I can execute here. So the standard risk is the yellow box based on statistics. But the execution risk is the amount of risk that will trigger me to get out. Like if this red line breaks, I want to be short. I don't want to wait all the way and take a full 1-hour loss. Now here's the next trick we talked about in the Foundations course. If you have that as your standard risk, set that equal to 0.6 position sizing risk. Now you won't be under any temptation to try to front run that exit, right? You can just let it be what it is. You don't want to try to fine-tune a signal when it's actually living inside the noise. So anyway, we stopped in reverse there, and all is well, and it's failing to fail, and it stalled enough to get into the fall, so we just took the standard exit when it crossed and hit the PSAR, and that's about another +1. So this little plus 1 here pays for the minus 0.5 plus the plus 13 before, so we'll call that 13. Sniper trade of the day, part 1. Now this is the second one, because it was that kind of day today. Big gaps lead to big ranges, so that's the day that I want to be trading. So on this instrument, it closed here. Here is the sell-off, the gap down. This is the opening range 3. This is going to, if I take a trade, this, by the way, is going to be the standard risk. That's the size of the R10. This is the size of the OR3. So you can see that this thing not only had a very large gap, that opening volatility was off the chart. So this thing has a chance to make big moves today. Now you don't have to be in a hurry. Like, this thing is in play. And there's the bottoming action of the R10, of the 10-period regression line. And now you can see how the PSARs are coming down. It's probably going to look like that. But you can also see, because of this little choppy action, that the dragon is starting to roll over and is going to start forming kind of that bottom of the dragon and the bottom of the RL10. So that price move combined with this gap down, it's not a surprise that this very tightly pinched MACD Red River explode. That's what a harsh winter looks like. And then when it smooths out and starts to come into the station, that's kind of the end of the harsh winter. And now the SSC is ready to be in play. Because it's in play. It had a huge move, and all of that fear triggered. This thing is in play. There's either more fear mongers want to push it down another, however big that move was, they want to push it down that far again. Or the buyers are going to come in with tons of money and say, this was an obvious fearful overreaction. We're going to buy this artificial intelligence company on sale and send it back north. Both scenarios equally likely. We'll follow the price. So at this moment, what I'm trying to say here is that you can wait to see that things are in play. That's called finding the movers. You find an extreme winter that is now turned to spring outside of the Red River. That thing is in play. Found mover. This was a 9% sell-off at its peak sell-off. So now what I have is a simple SSC with standard risk. If it closes the gap, it's going to get to here. If it gets to the high of the day, it's going to get to here. If it gets a 50% retracement, it's going to get to there. All of those are reasonable moves, especially since I know that this is 1/10 of the range stat, which we know is the max reasonable intraday move. So it was just up here. It could get there again. So we'll see how that works out. Standard exit, standard reentry, scratch, short, scratch. Those aren't failed trades. They don't even register. They're like bugs on the windshield. Caught a 2R battle drill. Standard exit for another 4R. So this is 4R on this move. These two scratches don't even matter. And here's +1. So that's 5R, and that's not even taking the OR3 and getting juked around. It's finding the mover and playing the pattern when you have an opportune moment. So pick your time in the trade that gives you an advantage. So 2 sniper trades of the day today. We'll take a quick look at my brother's Rivian. All things bright and beautiful. So he's on, this is on a 3-day chart. And all that thing has done is left the dragon, left the station, and climbing forward. 22 is in sight. 30 is a reasonable target, as we recall from yesterday. This thing is just, he's smashing, taking the
42%.
intraday trade and converting it to an overnight position with markets money. Anything else you want to add there, Bill?
No, just saying it's 42%. The upside could be huge on this, but just ride it for what you can and keep your rules. That's it. I mean, standard work.
Yeah, when we say could be huge,
Could be.
yeah, if we were going to put a number on that, like an engineer, what we would say is, this is Rivian. Oh, where's Rivian? Sorry.
Next
Rivian?
stop is
yeah. So, like we said
30.
yesterday, it's got to get through. Where's my pen? There it is.
It's got to get through 21.
Yep. This is the junk.
And it's cleared that.
Ta-da. None of that is resistance. This is free range chicken. Free range Rivian.
Yep.
And anybody that can read a chart will see it that way. So this is still working. If we just zoom out a little bit on the 3-day, we can see how this is a material change in condition. Just went into the summer for the first time since back here. Now in summer. And this is 40. And this one is 30. So this has a long way to go.
Yeah, where does it go? 60? I don't know. Maybe.
Go on with its bad self. That's what I want it to do.
Yeah, you just ride it.
Yeah. My job is to adjust my stop, and then it'll tell me when I get out. All right. Damien brings home 3R today. OR3 short cover. Consolidation. PSAR flip. Standard risk short. 2 sets of 1.5 for 3. Go golf. Or garden. Harsh winter. Winter, spring, winter. That's the auto short. Nice work. . 4.3 from Brian. DIA on the 3 minutes. OR3 short. Considered a second position, just stayed with it, came up and nudged, so why not? 4.3. Brazil, another 3.2, so pretty sneaky good work today. He considered a 1-2-3 entry, waited for the breakdown to new low of the day. And remember, it can go a full range stat from here south. So he gets short, standard risk, considered a second position, covered it as it came through the dragon for 3.2. And good work on the self-talk and coach's eye. Starting to come together. All right, Hamad. Now, this is where I want you thinking about. I personally think you should give the OR3 a rest and wait to see harsh winters for things that are in play, and then play the SSC Kata 2 or collapsing dragon sequence. Give them the first move until you see that it is a harsh winter in play, or a super pinch or Z3 pinch, and then you can play the Z3 breakout from here. So I really think you should be looking at this, because most of the losses you have today are in this chop, and then you're emotionally worn out in here when it's working in your favor. So I would, that's the evidence that I'm seeing. This is much better. You're able to avoid the chop. There's your Z3. Fake one, go to. Hit it and hit it. Nice. Early monkeying around, just grinding up your emotionality. It's never in play there anywhere. The first time that it comes close is on this, where it's like a fake one, go one, and then the next breakout is here, which pays. And then this is a collapsing dragon, which pays. I think you want to be more selective now that you're understanding the patterns. Stayed out of the chop nicely. That's the point I wanted to make. Stay out of the chop. Kata 2s galore and a Z3 pinch breakout. Got it. Good trade. Got slaughtered early. And then there's never a pattern that's worth trading. So that would have been one to just watch. Rivian. I like this one because you gave it time. And this was measured. It had 10 bars to fail and it didn't. That's almost a fake one go to. PSAR flip. I don't mind that. I like this as a Kata 2. There just wasn't much room in it. Tesla, I like the confirmation that it's in play, and now this is a quick collapsing dragon after a tiny R10 wiggle, and you got maybe one bar late, but still that's pretty good. I like this better here than here. And then that's not a bad exit. I like that you stayed out of the chop. You waited for the Z3 break. That's worth taking the shot. It just didn't follow through. And we saw that one from my brother in Ribbit. I will get the charts, the daily reports pushed to you. I just finished printing them, and we'll get that out to you. And I'll be uploading the Foundations Q&A session for the Foundation students. It was a pretty good one tonight. It was a lot on position sizing and scaling, and I think you'll find that to be very, very helpful. I should note that we put the bar by bar course on sale, 50% off for the month of July. Normally $1,000, you can get it for $500. The link was in yesterday's daily report link, and it's also on the archive for the daily reports. So that's everything we got for today. Take good care. We'll see you tomorrow.